Happy Sunday, everybody. If you are watching the replay right now, go ahead and skip in a few minutes. I just have to blast the link out to everybody real quick. All right, guys, I'll wait about a minute to let some people hop on. Again, if you're watching the replay, just skip in until you hear me start talking about the markets. Probably about another 90 seconds or so. Let me know in the chat if you guys are watching live right now, if you guys can hear me. I want to make sure that we got the audio working well. Hey guys, what's up everybody in the chat? Definitely grab your coffee. Ivan, what's up, man? Awesome, sound is good. Loud and clear. Awesome, Samir, good to see you as well. All right, we will get started in just a few minutes here. Actually, less than a few minutes, a few seconds. Dimitra, good to see you as well. Don't forget to smash that like button, guys. If you guys like this content, if you guys enjoy these weekly outlooks, get some value out of them, please do me a huge favor and smash that like button. It means the world to me. Consider subscribing if you're not already, so that way, and turn on the notification with the bell, so that way you get a little push notification each Sunday when I go live, and it's not spammy or anything whatsoever. It just tells you when I do my weekly outlook. Alrighty, everybody. Well, we'll go ahead and get started. Happy Sunday to everybody, or most of you, if you're watching this live right now. Hope you guys all had a good weekend to get some rest and relaxation in, and I hope you guys are ready to hit it hard this week. The markets have been really, really good for us. I haven't done a whole lot of trading this month, but January absolutely killed it. If you look at my MyFX book, my track record, I did about 20, actually a little bit over 20% in the month of January. So we are definitely having a good foot forward. The analysis has been spot on. If you guys were on last week's weekly outlook, we were pretty spot on. I'm going to just kind of recap what we talked about last week also. So in case you're new around here, you kind of know what to expect. But yeah, let's go ahead and get started. All right. And if you are new here, by the way, welcome. My name is David Schinkel. I'm the CEO and founder of Positive Traders, and I do these Sunday outlooks just about every single Sunday, every Sunday that I can for you guys, completely for free, just to help you guys out, give you guys some ideas of what I'm trading for the week, and maybe it aligns with what you guys are looking at, maybe gives you that boost of confidence that you need to get into the market. So definitely encourage you guys to use me as a resource. If you're on here live, definitely ask any questions in the chat. I'll answer your questions in the chat. And even if you're watching the recording, leave a comment, or if you don't want to leave a comment, you can reach out to me on any of my socials. You can find me on pretty much every social media under my full name, David Schinkel. But let's go ahead and get started, guys. As usual, we'll go over the economic calendar first, and then we'll jump into the good stuff in the markets. Just want to kind of take a look at what we're going to be working with for the week. So tomorrow, the only high impact news that we have is going to be a monetary policy meeting minutes from the RBA for the Australian dollar. We actually have another meeting minutes this week too on Wednesday from the Federal Reserve for the US dollar. And then the rest of this week, we have just a lot of other fundamentals sprinkled throughout, a lot of CPIs. So we've got some CPI for the pound and the Canadian dollar on Wednesday. We've got some labor reports from the Australian dollar on Wednesday also. So Wednesday is going to be a pretty busy day, but you can see tomorrow and Tuesday is going to be pretty light, right? We've just got the meeting minutes on Monday, and then we've got an economic sentiment for the euro, German ZEW economic sentiment for the euro on Tuesday. Also looks like we have price of wage index in the afternoon on Tuesday, or North America time afternoon. Always keep in mind, guys, if you're using any sort of economic calendar, it doesn't really matter where you get your information from. I mean, it does, but there's a lot of websites that all have the same information, whether you're using Daily Effects or you're using Forex Factory, or I've only ever used Forex Factory. That's what I started on. That's what I like, what I'm used to. So this is what I use. But main point is make sure that the time is set to the right time zone that you're in. Okay. Thursday, we have an ECB monetary policy meeting accounts as well as retail sales. That's going to be it for Thursday. And then Friday, we've got a whole slew of PMIs coming out for a bunch of different countries in the Eurozone. Okay. So pretty busy week, not a whole lot going on, in terms of central banking interest rates, right? We don't actually have a single interest rate decision this week. It's a lot of microeconomics and micro fundamentals. And yeah, that's it. So, but I am probably the most interested in this year over year CPI for the pound on Wednesday, and then the meeting minutes from the FOMC on Wednesday as well. Also, the labor report for the Australian dollar, I kind of have a bit of interest in also. So yeah, definitely want you guys to be aware of what's going on. But let's look at the charts now. As usual, before we jump into the new stuff, I want to just quickly recap last week, what I went over last Sunday. Okay, so I was very clear last Sunday. In fact, I don't hide anything. The recording from last Sunday is right underneath this video. If you can go and watch it, you can skip through it and try to hear as much as you can, or like if you feel like watching the whole old replay, if anybody wants to fact check me basically, just to make sure I'm not saying anything that's untrue, it's all right there for you guys. Okay, so last week I was very clear, and I told you guys that I had my only focus for last week was short-term bullish for the US dollar, right? I was looking for buys on the US dollar. Okay, so last week I had 3 pairs marked off, and that's gold, Euro USD, and dollar yen. Okay, these 3 pairs were all I focused on last Sunday, and all of them respectively for a bullish USD. So that meant last week I told you guys that I was looking to sell gold, I was looking to sell Euro USD, and I was looking to buy dollar yen. Okay, now if we take a look at what happened, if we look at the weekly chart on everything, we can see that the gold did not really do a whole lot last week. It actually just kind of went sideways. So if we go from Sunday, okay, so Sunday was right here on the 10th. Okay, we did find, or actually, let me double check that. Sunday was the 9th, but like the way the candles set up, like that was Sunday's candle. Okay, so it shows February 10th at the bottom of my screen right here, even though that's technically was Monday, but it's just because that's the Sunday going into Monday's candle. Okay, so this was Sunday's candle when I called a sell on gold. Didn't find a whole lot of downside. It did move from the 1575 area all the way down to 1562. So this move, here, let me get my marker out. This move doesn't look like a big move in perspective of the charts, but that's just because gold has been very volatile recently. So, but this is a pretty big move. $15 on gold, 150 pips on gold. However you want to look at it, that's a pretty big move on gold. Overall, it did towards the end of the week find some upside, but gold is still very much so ranging, right? I wouldn't consider gold bullish yet because it hasn't broken the monthly highs, okay? And we're still sideways in consolidation after a big rally, okay? So gold was a break-even trade on my end. Euro USD, this was the real big winner for last week, okay? If you guys were, again, if you were on last Sunday's webinar, I pointed out, main thing I pointed out was this channel that we've been in since May of 2018, okay? And how we've just been in this small downtrend. I mean, some of you guys might not I'm not trying to like chastise you guys by saying you don't understand, but we might just have different perspectives on the market. For some of you guys, you might consider this like a strong downtrend, but this is not really a strong downtrend. This is mostly sideways, especially when you really look at it. It isn't a channel, but this is more of a range than anything, okay? The trends, like when we see in the market, that like this is a downtrend, this is an uptrend, this is a downtrend. This is like, if you want to be technical, yes, we are making lower lows and lower highs. So technically, quote unquote, this is a downtrend. However, if you look at the charts on like a monthly outlook, it's really sideways, right? Hasn't really had a whole lot of movement. Okay, but I mean, if you don't agree with me, that's okay. We can agree to disagree. Let's just call it a channel. Okay. And what I told you guys last week was that my bias was that Euro USD was good for a sell, right? Bullish US dollar, and that we would head towards the underside of this channel. And that is just what happened. Okay. So we had a nice bearish engulfing candle here on the weekly. And so this big red candle was last week's drop on Euro USD. So that played out very nicely for Euro USD. And the last pair that I went over last week was dollar yen. And I told you guys I was looking for a buy on dollar yen. And you can see similarly to gold, it didn't really do a whole lot. It just went sideways. So this is the weekly candle. This is last week's, this right here. Let me grab it. Let me show it. This right here is last week's candle, right? Not a whole lot of movement sideways. And now that I've kind of covered, so that was a break-even trade also. So 2 break-even trades, 1 big win on Euro USD. So that's pretty nice. So, I mean, it's pretty simple, guys. This is why I do the weekly outlooks. I mean, if you show up, you pay attention, you take notes, you're going to make money. Okay. So there we go. Dollar yen. Okay, let's go ahead and segue into this week. So I'm going to actually, I had these marked off as red because I'm not interested in trading them, but I did just want to recap them because I covered a whole lot about them on last Sunday. Now for this week, I have 2 pairs that I'm starting off the week with my focus on, okay? That is pound yen and dollar yen, okay? You'll notice the common currency in these 2 pairs is the Japanese yen, and both of these pairs, I'll just spill the beans. I am looking to buy these pairs this week, okay? Not just this week. I think that we are going to start to see between now and the next, I'd say at least 4 weeks. It could go maybe 6, 8 weeks or more, but at least the next 4 weeks, we should start to see the yen find some more weakness, and we should see these pairs climb. And this is a nice segue from last week because I actually mentioned when I was talking about dollar yen last week when we were like right here. So on the short term, I know I'm all over the place, but just to kind of recap also, this is Sunday's candle, last Sunday's candle right here. Let me just double check that. Is that the 10? Yeah, that's Sunday's candle. So on that Sunday candle, remember, all last Sunday, I said bullish US dollar. So this there was a lot of opportunity right after Sunday's outlook. If you guys watched the outlook, to make money on dollar yen, it popped up about 35 pips and then it went sideways. It fell back down to the weekly entry and then it's just sideways now. But what I really, really like, and the word I used last week and I use frequently when I'm looking at trading a trend or looking at trading a new trend, is a continuation pattern, right? A bullish or a bearish continuation pattern. So I said on dollar yen that I was looking for a bullish continuation pattern, and we are definitely getting that bullish continuation pattern right now. And there's some people might disagree with me because they might like look at the 4-hour and see like a double top here, this and that, but it's like too late for that. Like this, if you wanted, that's in my opinion, if you wanted to sell dollar yen, the better move to sell dollar yen probably would have been right here. Okay, I don't even know what day that was last week, but I can check real quick. The 12th, so that was like Tuesday, right? So for you to be able to sell dollar yen, that would have been a really nice trade, counter trend trade, an example of a liquidity grab, right? Where we see the markets just barely pop up above this high, the previous high that the market had made, and then go above those highs, grab the liquidity in that area, and then move down lower. And now we're back at these lows. I definitely recognize on the 4-hour here, you know, some people could say, well, there's a bear flag here. So that's like a bearish continuation pattern on the 4-hour. I like that, but in my opinion, that's too, and again, this is just my opinion, okay? You don't have to agree with me, but in my opinion, that's too narrow of a focus for the overall move, okay? Because I'm not just looking at dollar yen either, okay? I'm also looking at pound yen, okay? And if we look at the weekly on pound yen, the weekly really kind of gives us that hint, or at least for me personally, it gives me that hint that I think we're going to see a bullish week and we're going to start to see a bullish trend on pound yen. I'm going to get to this blue box in just a second. This has been on my chart for a couple of weeks now, but I'll get to that in just a moment. But I really like how last week we had a nice bullish engulfing candle. We completely retraced the previous weeks, the week before last, bearish candle. Yeah, overall, that definitely shows signs of strength from buyers. Now this blue box, okay, some of you guys might be reading this for the first time. It says first target is 2020 highs, then liquidity pool above 146 if there's a convicted break above 144.20, okay? Now, if you're in just my free Telegram group, this might confuse you because you might not have seen this before, but back on January 8th, I believe, let me just double check in the private group. Yeah, January 8th. So we were here at the time. Let me just do a little bit of this. Okay, so we were here at the time when I first published this to my group. I really liked this bullish, kind of similar to what we have on the weekly. We had that bullish engulfing candle on the daily, and then we had a lacking bearish candle, and then a nice bullish candle right here. So I had put out some analysis that I believe that we were going to travel back up to this red line, which is the first target right here, 2020 highs. And then I said, if there's a convicted break above 144.20, which is the same yearly high, that we would travel up towards the liquidity pool above 146, which is this green box, okay? So if we kind of fast forward a little bit to what happened, you can actually see we did travel from that level up to the 144.20, which is exactly what we wanted. So at that point, it was just kind of a waiting game. We were going to see, okay, do we see a convicted break above 144.20? Are we going to continue buying up to 146, or are we going to stop here? And you can actually see, you know, hindsight is always 2020. We can see that the market did fall from that area, and that just kind of basically told the story for us, right? That sellers are very much in control at these highs, and that we could not sustain the move above 144.20. And so this kind of becomes irrelevant at this point. So I will go ahead and just delete that box. But if I fast forward to where we're at now, right? Okay, so this is live now. You can see that we really haven't moved a whole lot since then, right? We kind of found a couple bounces off of the yearly highs. So I can actually move this now because the real yearly highs is basically right here now. All right, and we have been sideways. And again, you go back to the weekly chart, we can really see that last week. And this is why I love candlesticks and I like different time frames, because when you look at pound yen on the daily, right, we know it's bullish, right? Or at least that's the major trend that we're in, is we're bullish on pound yen. But this can kind of get a little confusing, right? Especially even right in here, because the market is just sideways. There isn't a whole lot of, you know, clues for us to look at of where the market is going, okay? Because there's a lot of, you know, we've got like this big red bearish engulfing candle, so there's a lot of sideways movement. There's also the 50 EMA just kind of cutting right through the middle of price right now, so there's not even a whole lot of justification on the daily chart for one way or another. But on the weekly, you can see very nicely that there's a big bearish engulfing candle right here. And yeah, I mean, that just tells, at least for me with my strategy, that tells me that buyers are in control in the market, and not just pound yen, but the fact that even a week ago, this time a week ago, I was looking for a bullish continuation pattern on pound yen, because overall I'm expecting safe havens to weaken, at least right now, and the yen is a safe haven. And so that is part of my bias too, right? From a fundamental standpoint, looking at like the coronavirus and a lot of the things that are in the world are kind of simmering. I mean, yeah, there's a lot of news, and depending on where you're getting your information from, it could even be like scary news about the coronavirus. But if you actually dig really, really, really deep, there's actually a cure for the coronavirus already. Yes, you guys are hearing that right. There is a cure for the coronavirus. There's an American biotech company that actually found the cure to the coronavirus in the middle of January, and they found the virus, and they found out the cure within 3 hours of receiving the genetics of the DNA of the virus itself. So it's crazy. They're trying to like break a record right now, because they had found a cure for, I forget if it was Ebola or the SARS virus, but one of those two. They had found a cure, and they went from finding the cure to human trials, and it actually being like prescribed to people within 7 months. And they are trying to beat that record right now with the coronavirus. So yeah, I mean, if you really know how to dig deep and where to get your information, you'll know that there is actually a cure out there, but human trials from this biotech company can't actually start until the summer of 2020, the summer of this year. So, but yeah, and that's what I mean. If it like, you know, on the outside, like if you just flip on the news or you just do a Google search, yeah, you're probably going to think, oh, buy gold, you know, buy the safe havens. Now, I still do believe at some point this year, gold is going to climb very fast in a very short amount of time. And I still stand by the statement that I made at the end of last year and the beginning of this year, about a month and a half ago, saying that gold will hit $2,000. Okay. Now, I stand by that, but I'm not like, guys, I never like over leverage a single position. Okay. It's like the saying, you don't want to put all your eggs in one basket. Okay. Just because I say that gold, my opinion is that gold is going to break $2,000 this year, doesn't mean that you should just like be in a buy on gold with a super over leveraged position, and that's the only position that you're in, and you're just banking on, you know, it's either like gold drops and you blow all your money, or gold goes to 2000, you make a bunch of money. That's like a terrible way to trade, guys. You need to be managing your risk. So I do recommend that over the next couple of weeks, months, as gold pulls back, which I think gold will probably drop back towards like the 1500, 1530, maybe even a little bit lower than that before it starts to travel and break new highs. I would definitely consider, you know, taking a small portion of your portfolio, whether it be 1%, 2%, 5%, whatever, a small position of your portfolio, and hold a buy on gold with you know, proper leverage, proper risk, proper stop losses, proper everything, you know, proper positioning. So that is that. Let me go ahead and take a look at what we got in the chat. Did I sell gold last week? I did not sell gold last week. Arkash said, I'm waiting to buy Euro USD. Yeah, so I'm not super interested in Euro USD. It's too close to the bottom of the channel for me to have interest, right? For me, the big move was selling Euro USD last week, or that was the big win on the analysis. Long corrective pattern. Corey said, for some reason, the links from Telegram and Discord aren't working for you. Not sure if anyone else had that issue. Thank you, Corey, for that. I'm not sure. I'm assuming, let me know in the chat, guys, real quick. Did you guys come from like the links in the Telegram, or are you guys subscribed and you got a notification on your phone? I just want to, maybe if the links aren't working, that's because I was kind of wondering why there weren't a whole lot of people in here. So that could be the case. But yeah, okay, just a quick recap, right? Pound yen, dollar yen. I'm looking at buying these pairs this week, and I'm looking at getting, you know, I don't expect my bias for these two pairs to change for a couple of weeks at the minimum. Okay, I think we're gonna start a new wave on dollar yen and pound yen. Dollar yen especially, we've been consolidating and just reaccumulating between like the 108 and the 109.80, like 110 area, we could call it. So basically be like this 200 pip range that we've been in since Q4 of last year. Markets have to move at some point. Okay. So that's what I'm expecting for. Jefferson, good evening. Yeah, no problem. Thank you for your guys' attention and being here. He asks, do you mind sharing what size of lots you usually trade with? Sure. I mean, I'm super transparent with that. I'm not throwing like 50 lots, 100 lots or anything like that. Okay. Like I'm telling you guys right now, 99% of the people that you see online, if you see them posting on their stories on Instagram or making posts on Facebook or Twitter or whatever, and they're only showing you the trade screen and it's not like a live video with them showing it verified and all that, and they're throwing 50 lots, 100 lots, I can almost guarantee you that it is a demo account. Okay. I mean, I'm not here to say that I'm a saint and I'm the perfect trader. Like, sure, there's probably a couple people out there, but like, you just kind of got to use your brain, guys. Like I look at it this way. Okay. And this is the reason why I have a track record in a MyFX book. Okay. This is the way I look at it. If you can actually throw those kinds of lots and you can flip the accounts that you say you do and, turn your $2,000 into $50,000 and get all these followers and all this cult following of people that think you're some god trader, why would you not have a MyFX book, right? Why would you not want to show the process and in publicly be transparent with people, right? Think about it from a business perspective. If you're trying to sell a course here, and there's nothing wrong. If you're a legitimate trader and you want to sell a course, or a legitimate trader and have a group, there's nothing wrong with that, right? Having multiple streams of income from one skill is totally fine, right? Trading for yourself, doing this, doing that, having a group, whatever you want to do, that's fine as long as you are legitimate and can back up the claims that you are making, right? But if you are throwing those kinds of lots around and you are flipping accounts like you're saying you're doing, why wouldn't you have a MyFX book? Wouldn't that increase your traffic and increase your credibility tenfold, right? I know from personal experience, right? I'm not trying to say again that I'm the perfect person and I'm the only person that has a MyFX, but there's other people out there that have MyFX books. But it's the fact that like if you don't have a MyFX book, you don't have a track record, and you always just like get defensive when people ask you for something like that, it just clearly shows that you're very ego driven and that you don't actually trade, right? You're probably losing a lot more blowing account, having a big win, and then blowing account, having a big win, and then you're only marketing those big wins. Trading is not about the big wins, okay? It's about, I mean, of course, big wins will come, but it's about consistency, okay? So yeah, when I see somebody that claims to trade and they don't have a track record, I immediately, I cannot have credibility in that person, because it's like you aren't giving out a track record, and it doesn't make any sense, because if you did have a track record, you'd have 10 times the amount of people wanting to learn from you or be just listen to you because you have credibility, right? So the people that do that throw 50, show a screenshot, and they only show the screenshot. They don't show a video showing it a live account or anything like that. They're just preying on new people in the market. They're preying on ignorant traders that don't know, and I mean, if they don't know, that's they don't know, right? But the people that are doing this know, and they're preying on those kinds of people. So just be careful, guys, because this Forex niche has really been tarnished over the past couple of years by people coming in and making a group really quickly, and then being, oh, I'll give out signals, this and that. And sure, they give out a couple winning signals here. And at the end of the day, it doesn't even matter about the win rate, right? You could give out 2 good signals and 8 bad signals. That doesn't make you a bad trader. You can have a 20% win rate and still be a profitable trader. But what the key is consistency. Okay, is consistency long term. Can you show consistency month over month, year over year? All right, and that's like, I mean, I practice what I preach. I practice, right? I have a fully verified MyFX book going on 3 years now, and it's publicly available. And if you don't know how to find it, you can message me on socials. I'll send you my MyFX book. It's on my bio, on my Facebook page, on my Facebook. It's everywhere. It's in It's in the Telegram link in the bio or in the more info for the Telegram. It's everywhere. Okay. I think it's even in the description below. Okay. Anyways, yeah. Sorry, I kind of went off on track records right there, but it's just super important, guys. It's like let me just put it this way. You can spend so much time in Forex. You can spend so much time, years and years and years trading, but if you don't have the right information, you're literally wasting your time, right? It's like good information in anything. If you want to get into anything, real estate, you want to get into the car flipping business, you want to get into drop shipping, you want to get into whatever niche or industry you want to get into, the key is getting the right information, okay? Not what you want to hear, not living in some la land of unicorns where everybody's flipping accounts and making $1 million in a month from $100 account. That does not exist, guys, okay? Yes, there's people out there that get really lucky. In fact, yesterday I was with a guy, or I met a guy who turned 8K into 50K trading cryptocurrency last year. And, you know, he actually did it. He showed me his bank withdrawals. He showed me his bank wire of taking 150K out. He showed me all of the trades. So I see, you know, like that people do get lucky, but he recognizes and he is self-aware that he got really lucky and could have lost it all, right? So it's like, guys, you have to, if you're going to take risks, take well-managed and calculated risks, right? I know you see all these like gurus online that say, oh, you know, you can restart whenever, but guys, like, you know, you want to make the best use of your time and make sure that the information that you're getting from whoever you're listening to is quality information, and you're listening to somebody that is in a position of where you want to be. Okay. And doing what you actually want to do. Okay. Just because somebody drives a Lamborghini and takes a picture with a $30,000 iced out Rolex on their hand doesn't mean that they are qualified, right? They don't be blind to what is actually going on. Okay. So just be careful. You know, there are some legit guys out there. There's lots of legit guys out there, but there's even more unlegit people out there. Okay. So just be careful, guys. Okay. That's my little PSA for the day. Okay. But anyways, again, if you're just hopping on now, maybe here and in the middle of my rant, I am buying pound yen and, well, okay, I'll be a full disclaimer. I'm not in a buy yet, but I am looking to buy pound yen and dollar yen this week, and or possibly both. I really like dollar yen though. I mean, I like pound yen also. I mean, all of the pound pairs look bullish for this week. So that's another thing that we've got going. If we've got a bullish pound and a weak yen, I think this is going to be a good mix to buy pound yen and also dollar yen. Okay, so that's all I've got for the week, guys. Do me a huge favor if you guys have made it to this point in the video and you've gotten any type of value today, or even in the past, if you could smash that like button, it really helps me out. It helps the channel grow. I'm really trying to end this year off with at least 10,000 subscribers. So between now and the end of the year, I'm trying to 10x this channel. And it really helps when you guys like this stuff, because it helps the algorithm get this information out to new people. So I appreciate you guys. If you're not subscribed, consider subscribing, pressing that bell so you're notified every time I go live each Sunday. But other than that, guys, have a wonderful week trading. Everybody, I will see you guys next Sunday for the next weekly outlook and in Telegram. And everybody, or my students, I will see you guys tomorrow for the daily webinar. So take care, everybody, and have a wonderful week, guys.